Good evening, it's Quantrade Edge, and today there were a couple of setups with my all-time favorite pattern, the intraday cup and handle. It's very similar to the William O'Neill School of Trading, except they look at daily and weekly patterns. I find the same structure, the same volatility compression happens on lower time frame charts. So this here is the S&P 500, and we had a strong gap up today, and that strong gap did not even fill halfway to the 50% line. That's a sign that it's very strong. And there are numerous ways you could have gotten in on this. One way is just looking at the pullback from the initial high, and that was a very clean 2 legs down and a pretty small risk bar. The risk bar is this bar right here, 1050 to 350, 7 point bar. We always try to make 4 times our risk, so that would be 28 points on top of 1050 would be 3850, and 3850 was achieved. 3850 would be right about here. 4 times your risk on that 230 to 245 bar central. Now let's say you didn't catch that, didn't have that perspective when that low was being made. The other thing that's interesting is these little pink dots are a volatility compression formula. It's basically the 3 period ATR divided by the 20 period ATR is less than 0.7. And that helps me find handles in cup and handle type patterns. And granted, this isn't the typical cup and handle where you have your handle at the top. My next example should look more like that. This is more of one of these low base type setups with an early entry that is taught by William O'Neill, Mark Minervini, all those guys that follow that school of thought. But when I see this many compression bars together, what I was doing was waiting for this bar to get taken out to the upside. And when that happened, I knew that we would get an outsized move in a short period of time. So the best tool to use to play those are the series of options that expire every day. And that's what I did around here, the 39.95. And again, this is the futures, and there's about a 30-40 point difference to S&P cash. But S&P cash was about 39.90 at the time, and given that there was only a little over an hour left in the day, the 39.95 call was only $2.20. And that call over the next hour, going into here, got as high as 1260. So 220 to 1260, almost a 6x, probably a 5x in an hour is amazing. So that was one way to play this pattern. So again, the beauty of this pattern is you get speed out of it. And speed means the options are not priced accurately for the type of move that's coming. The other example today was in Adobe. And you can see how this is a very similar pattern to that S&P pattern. And again, we have the morning dip and the setup here, and then a whole lot of low, this is called volatility compression, where these bars have very low ATRs relative to the previous bars. And again, once this level got taken out right here, 368.90, call it 369, within 1, 2, 3, 4 bars, so about an hour, you went from 369 to 376. That's what, about $7, a 2% move in an hour. Again, the options don't price that in, and that's the way to play that. I had a detailed filter on that. I'll post that in another video. I call it the AMD pattern, and I only call it that because the first time I found this pattern, it was on the stock AMD. And so that name has stuck, and I can give you the parameters for how I screen for it. And it's something I usually screen for 1 or 2 p.m. Well, actually a little bit sooner, I'm sorry, 12 or 1 p.m. to see if that pattern is forming. And really the real tell is when you start to get some of these low volatility bars. Then you just have to stock the pattern and wait for a good entry, which in this case was above this previous high. So anyway, again, my favorite pattern because of the speed. You know, why make 4 times your money in 4 hours if you can do it in 1 hour? That's my motto. Anyway, have a good evening.